All right, everyone, welcome to Futures Friday. Hard to believe it's mid-December, but here we are, getting going. I've lost my chat box here. Yeah, isn't that a thing? Can't we say, what's up, guys? Doesn't that include guys and girls? Anyways, I could be mistaken there. All right, so it's been an interesting sequence in crude oil. I mean, we essentially haven't gone anywhere. Yeah, I should definitely be saying y'all now. In a while, we kind of started this, small consolidation, and then last leg of the sell-off was really this gap down on November 23rd. And as we all know, I mean, we have really, really sold off. Right? So here's the context of where this consolidation is occurring, and here's where this smaller one that I mentioned was occurring. Had one that occurred here, things like that. There's little pauses in the trend along the way and whatnot. But we really haven't gone anywhere since November 23rd. So we are getting ready for the next type of move. My longer term charts are showing this overall behavior, especially on kind of an ETH basis, as more of a flag type pattern, where we're just kind of grinding in here, and you would expect the break to come there. And it's not that we're trying to guess the future or anything. We are sticking with what is. And what is a market that has really, really, really sold off from even higher. This rally started at 76. So all the way up here. Really, really sold off. And now we've seen the biggest consolidation we have. And you would think that profit taking, people going for the value play, all that type stuff would be able to sustain some kind of a bounce. And that looked like that would occur, actually, in my opinion, around this area here. In fact, I think or at least during these 3 days here, I think I made a post around how that could be a substantial medium to long-term bottom there. And, it's a simple principle. We have a consolidation area for 1, 2, 3, 4, 5, 6 days. Attempt to break lower, which fails, and the next day we gap up and actually hold the upper edge of this consolidation, or balance area as we call it in the market profile world. And that right there, as long as that is going to persist, as long as that remains true, you should be bullish. You really should. Now, that's just looking at one time frame on one chart with one set of information. But based on that, that's a very bullish sequence. You have a existing balance, and you begin to hold above that until that changes, which, by the way, it did. We gapped right back down into it. And then it was a crazy sequence, to be honest. You have a balance area where we move higher, balance a bit, gap down into the lower area, gap up into the upper area, gap down into the lower area, and now we've since, kind of proceeded with what we were doing before. So very, very balanced here with a small attempt to break higher that wasn't able to sustain. So that kind of further lends itself to, a lot of times we talk about it's not always about what happened. It's also about being able to look at a chart and identify what did not happen. Very important. So as we take a look at today, we had some single prints here up until yesterday's high, where we had that K period ramp into the close. Yesterday was just nothing but up. We had some single prints in this lower area right here, so we could highlight both of those. And those have really defined the range for today. We are in rollover for crude. Let me get a little volumes update for you guys. We are at 410,000 for January crude, and we're at 200,000, essentially 194 for February. So, 50% of the volume is in the following month. So we are in the midst of rollover here. So rollover, shorter term references, identify some single prints. We did have some fantastic longer term references. I had one reference here, which I believe is where we saw the overnight high. That's correct. The overnight high went right up to there, rejected. We had another reference, which is around this area here, which this entire kind of retracement has gone to. So it made sense to be bearish off this area. And then we had a good reference, which I called out in the chat, 5230. And that was the real kind of bearish line in the sand there. Once in B period, C period retest up there, it does not get better to then head down towards our target, which we have at 5140s. So 5140s is what we were looking for to kind of finish up that move. Ended up getting a little bit extra out of it. I thought we were pretty much done in this area. Order flow absolutely dried up. Things have gotten really, really quiet, but we did squeeze a little bit out of there and kind of try and go and close out those single prints that we mentioned from C period from yesterday. That is how I would categorize the movement today in crude, with the best opportunities being retraces back up into the 5130 during that C period. And there were a number of opportunities where you could get involved, earlier, later, just depending on your methodology and what kind of time frames you're operating on. But for me, that C period high was as good as it gets. All right, what questions can I answer for you guys today? Robert in the Q&A is asking, what adjustments do you expect to make in your trading during a holiday period, second half of December? To be honest, Robert, I'd like to see some hard data on what ranges in crude oil look like during, let's say, average daily range in the second half of December as compared with other ranges throughout the year. So what we could do, I'm certainly not the best at these type things, but we could take a shot at it. Duplicate chart. All right, let's try that again. Okay. All right, so here's a daily bar chart of crude. How many years we got here? Going back to 2012, so that'll give us a decent information. So let's add, let me just go make sure we're in sim mode here. A spreadsheet study. Make sure we got plenty of rows. 100,000. Well, we shouldn't need that much. 10,000 should be fine. What in the world? Oh, it's all right. So let's just take our open, high, low, close data. Going back to September of 2012. Copy those values. I think something has happened to Zoom. It's acting a little funny. All right. So let's just paste that. There we are. And let's add a range column where we will take the high minus the low to come up with the range for the session. And let's just create a pivot table here. And so our values are range, and we want to now we want to sort this data. No, how do we do it? How do we do it? How do we do it? Group. So let's group by months. Is this going to work? I'm sure some of you are just rolling over in your proverbial graves right now as I hack my way through this Excel. I know some of you are absolute wizards. Oh gosh, give me just a basic bar chart. Here we are. So we've arrived at something of an answer. We're looking at, not even average daily ranges for the month, but combined ranges over the past. You know what? Our data is going to be a little flawed because it's not equal. We started in September of 2012. So actually, let's start. day after today. Does that make sense? I think that makes sense. Let me refresh this thing. There we go. So I don't know if that's accurate or not, um, but to me, December, not necessarily a cautionary time. Looks like June in the mid kind of summer is some of the quieter ranges we've seen over the past 6 years, I suppose, is the data we're looking at. But anyways, this is the kind of stuff, and again, I'm no expert at doing this kind of stuff, but I do get curious and I do look for, answers to these kind of things from time to time. And I think that it's a good way to do it. And so, obviously this was just a quick and dirty. What the way I would really like to do it is perhaps break it apart, week by week, something like that. Which you can't really do. Anyways, you could play around with that. You could sort your data by weeks. You could take a look at just how it evolves over time. In fact, you could perhaps, us as visual traders could actually scan this thing. Where is it? Insert. You could actually do a full, thorough kind of seasonality study, not on directional behavior, but if there's seasonality in terms of average ranges. And in fact, can't we add a trend line? There we go. We could put a moving average of the rolling past, 20 trading days, roughly a month. Where's the color? There we go. So we see a ramp up here from July up until the new year here. Here's July up until the new year here. Pretty stagnant, didn't really do anything. And here we are July up until current, seeing some of the higher average daily ranges that we've seen. So, I think this is kind of proving to me, not proving, nothing we've done here today is proving anything. Showing me that there's a lot more randomness in terms of where volatility comes in, where volatility is not. I know towards the I severely underperformed personally, but I know towards the tail end of last year, there was really good contextual setups and swing trades that I should have taken advantage of. And I think my holiday travel schedule and whatnot last year kind of threw me out of sync, and I just didn't see things as well as I should have. So I thought there was a lot of opportunity last year towards the tail end of the season. But anyways, pretty nice functionality within Sierra to be able to just take all of your data, and not only price data, but any indicators you plot on the chart, you'll have all that data over here as well and everything. So. Here's a good question. Hey, Merritt, I use volume profile mainly because my charting package does not offer market profile. What pros and cons do you see when comparing volume profile to market profile? and what made you decide on market profile? So I use both, to be clear, but absolutely market profile is the preferred tool, or the more often used tool. They each have various strengths and weaknesses in my mind, which I can highlight a few. Let's see here. So if we were to look at this, you would see, what do I have here? Well, I have volume profiles for each of the RTH pit sessions day to day to day. And so how to begin this as a concise talk? I think in general, let me just change the share here. I'm so sorry. In general, market profile does a really good job of simplifying information. You can see the main distribution, the edges of that distribution. Where there are single prints, volume profile does not show single prints. Therefore, volume profile is not going to alert you to where there are weak highs, and even better would be a poor high like we had right here, poor low, poor highs and poor lows. Market profile shows you those features because it does take into account time. Time is not irrelevant. You can tell FT71, I don't care what he says, time is relevant. We're humans, we live in a physical world. The algos behave where the volume is, they can't help it. There's no argument for that. We operate on a day and night schedule because of the way the earth rotates and spins around the sun. It is a very global 24-hour market, even crude oil. But the fact is that most of the volume occurs during a pit session. And so time actually does limit opportunities, as Jim Dalton says. We have 3 streams of data. We have price data, we have volume data, and we have time. And they're all important. They are. So that's my spiel about that. Another thing that volume profile can't do that market profile does is show me the sequence of events. I dare say that if you are going to ask the question, what's the market trying to do and how good of a job is it at doing that? I dare say that the sequence of events matters. How you spent price at time or how you built volume over time is important. So to be able to split them out into their own blocks or TPO periods and take a look at how it progressed over time, something we call micro poor highs and poor lows that we look for, intra profile as it develops. All these kind of things are doable with market profile. I believe that the value areas that market profile gives are better than the value areas calculated by volume profile. Now, what about volume profile? What does it do a better job of? I think that in general, it's volume points of control. I think a VPOC, I would say, is slightly superior to a TPO point of control, right? Take this day, for example. You have this E period, which is just a block. It's very flat. And you have this point of control, which was chosen to be right here. So this is 1211, and the point of control is 5208. $12.11 is here, and you can clearly see a really good prominent VPOC for this profile at 5220. And in fact, I would argue that 5220 became a much better reference for how the day following respected. So point in case there, I didn't plan for that, but I think VPOCs are slightly superior to TPO points of control. I don't focus on TPO points of control. I focus on TPO balance. The other thing that volume profile is better at, in my opinion, would be more granular of a view. Now, I understand I could probably get a lower than a 30-minute TPO time frame to give me more granular information. I understand that. By nature, I'm looking at this on a 2 or 3 tick basis here. And it's, tick by tick by tick, it's building volume as to where volume's actually trading. So it provides a more granular view. So this prior day, I can identify 3 main nodes on this profile. And so oftentimes we will use the edges of those nodes, if you will. You might say the upper one's up here. There's something right here. There's something in fact, there's a whole low usage area from here to here. Remember those single prints we talked about? There's a low usage area there, and then the lowest kind of early distribution down below. And as you can see, these were decent representation of how this market traded across these areas today. And that's going to happen day after day after day after day. It provides good levels. So knowing where the more short-term microstructure, if you will, LVNs are at the edges of nodes can be a benefit of volume profile. It's going to give you a more granular view. Guys, unfortunately, that is all the time we have today. Hope this has been helpful. If you want to be a part of our community and you're not already, visit smbfutures.com and see how you can get involved. We have a thriving community with just a ton of great people and great learning that goes on there. So come see us over there. Have a great weekend, guys. We'll see you in the room.